This course explains how to use Fibonacci extension and projection levels, those Fibonacci levels beyond the 0 to 1 range of Fibonacci retracement levels. These include famous levels like the 1.618 level, along with other levels below and above the familiar 0 to 1 Fibonacci retracement range. A series of detailed diagrams and examples of charts before, during, and after the application of Fibonacci extension levels will be examined in order to better understand methods that use tools like the Trend Based Fibonacci Extension tool, as well as the regular Fibonacci extension levels added to the Fibonacci Retracement tool, which will be referred to as Fibonacci Projections. Normally, when Fibonacci projection is mentioned in this course, it will refer to a Fibonacci retracement tool with those levels greater than 1 added, while Fibonacci extension will usually refer to the trend-based Fibonacci extension tool. However, the term extension levels can generally refer to any fib levels greater than 1 from either of these two tools. The chart examples will be from various markets and time ranges, so information from this course can still generally be of use to you no matter when you watch this, or which particular charts you choose to apply the Fibonacci extension levels on. To better understand Fibonacci extension levels, it's helpful to first define Fibonacci retracement proportions. Because whether a fib retracement covers the price range of an uptrend or downtrend, the levels and therefore the proportions concern movement based within the confines of a trend's price range. The trend from which the fib retracement is drawn can be called the reference trend. Movements are compared to that range in terms of proportions, percentages, and ratios. These are all essentially the same things, expressed in different formats. For example, a $10 wide reference trend covered by a retracement has movements compared in relation to that $10 range, which is 100% of the trend's range. A 23.6% portion of the range, more commonly represented by the 0.236 level, defines a $2.36 portion of the whole $10 range. A 38.2% or $3.82 portion of the $10 range is represented by the 0.382. Then, for example, there is a $2.14 difference in terms of the distance between the 1 and 0.786 levels. That is a 21.4% portion of the entire $10 range. There's a $5.50 difference between 0.786 and the 0.236 levels. That is a distance equal to 55% of the entire $10 range the fib retracement covers. A fib retracement is a gauge of how far the reference trend can be reversed before the new trend falls back into the influence of the reference trend to form a retracement. Trend-based Fibonacci extension is a suitable name for this tool because the extension beyond the normal parameters of a fib retracement is based on the starting swing point of a new trend. In this diagram, a new trend starts from point 1 from a downswing at the 110 price level. Point 1 can be called the originating or initial reversal. This is also sometimes called an impulse. The downtrend then retraces at point 2 on the 100 price level. Point 2 can be called the start of the retracement. Point 3 can be called the end of the retracement. Here it's when a downswing at the 107 price level ends the retracing upswing from point 2. It's common to see the retracement of a fib extension take place within a definable fib retracement on fib retracement levels, but this is not completely necessary. The points that define a fib extension can take place at levels that aren't in a defined fib retracement range or even at major support and resistance levels. The distance from point 1 to point 2 can be called the base trend. Since that's the trend-based fib extension tool will be based on. The distance from point 2 to point 3 can be called the retracement of the base trend to be more precise. Anything after point 3 is the fib extension. A fib extension uses the same proportions represented by the same levels of a fib retracement, but goes beyond the 1 level. Also, the 0 to 1 level range is shifted and starts at the end of the fib extension's retracement at point 3. Common default levels beyond 1 include the 1.618, 3.618, and 4.618 levels. 1.272, 1.414, and 2 are common additions that are normally not selected by default on most charting programs. Fib extension levels are the distance of the base trend added to the normal retracement levels from 0 to 1. That's why the 1.618 level is $10 or 100% lower than the 0.618 level, and why the 3.618 level is $30 or 300% lower than the 0.618 level. If 0.272 and 0.414 were part of the regular 0 to 1 range in a fib retracement, they would be 100% of the distance of the base trend above the 1.272 and 1.414 extension levels. In other words, $10 above. The extended levels can also be thought of from the perspective of the base trend attached to the end of the retracement, where the 2 level is double or 200% of the base trend, and the 1.618 level is 161.8% of the base trend, except instead of starting from point 1, the fib levels start from point 3. The same ideas apply to an uptrend except in the reverse. An initial reversal for point 1 starts a base trend with an upswing that is at 100 in this diagram. A retracement of the base trend forms a downswing for point 2 at 110. The retracement ends with an upswing at point 3 on the 103 level. The base trend is expected to continue higher over 110. The extension levels are still the base trend added to the normal fib retracement levels from 0 to 1. That's why the 4.236 level is $40 or 400% above the 0.236 level. The same idea applies with the additional extension levels, which is why the 1.414 and 1.272 level are also $10 or 100% of the base trend's distance away from the 0.414 or 0.272 levels if they were levels that were part of a normal fib retracement. Just like a downtrend, the base trend defines the distance from which to reference proportions. The only difference is point 3 ends the retracement with an upswing to continue in the direction of the base trend. The proportions are still the same starting from point 3. The 2 level is still $20 or 200% away from point 3. If point 3 is, for example, lowered, the prices identified are of course lowered, however the proportions are not. The 1.618 level is still $10 or 100% of the base trend's distance away from the 0.618 level. If the retracement of the base trend is a shorter distance and ends with a higher upswing, the price levels identified will of course be moved higher by the increased height of point 3. In this case, it's a $1.50 move with point 3 now at 104.5 instead of the original 103 position. However, the proportions still remain unchanged. The 3.618 level is still $30 or 300% of the base trend's distance away from the 0.618 level. A smaller retracement, only $1 or 10% down, moves point 3 much higher. However, the proportions are unchanged. The 2 level is still $10 or 100% of the base trend's distance from the 1 level. The only change is the $6 rise of all fib levels from their original positions, when point 3 was at the 103 level, as opposed to the current position at the 109 level. If we return back to the original position of point 3 but move point 1 lower and point 2 higher to increase the base trend in both directions, there is a much greater effect. All levels have now been moved according to the increased distance of the base trend. The proportions are the same in that the 1.618 level and 0.618 level are still separated by 100% of the base trend's difference. But the separation in terms of the price range is now the $13 distance of the new base trend reflected by the $13 difference from 124.03 to 111.03. The higher extension levels have been raised substantially due to the $3 or 30% expansion of the original $10 base trend range. The 3.618 level is now $39 away from the 0.618 level, but it's still a distance that's 300% of the distance of the base trend. Once again, the extended levels can also be thought of from the perspective of the base trend attached to the end of the retracement, where the 2 level is double or 200% of the base trend, or the 1.618 level is 168% of the base trend, except instead of starting from point 1, the fib levels start from point 3. As would be expected, the proportions between the levels still stay the same, but the distance in terms of the price range of the increments between the levels increases even more. Now, when only point 2 is moved, the base trend is still expanded. The $16 wide base trend carries over with the 3.618 level now rising even higher to be a $48 distance away from the 0.618 level, but still proportionally 300% the distance of the base trend's distance away. When only point 1 is moved to increase the base trend's distance, the effect is the same as when only point 2 was moved to increase the base trend's range. The only difference is it's an increase of $4 in this case. That means a base trend can be expanded or contracted by moving point 1 and or point 2. Again, when the base trend remains the same but the retracement of the base trend moves, there is no effect on the distance of the fib level increments in terms of the price range of the increments. However, they are all moved the same distance. In this case, they are all raised $10 higher due to point 3 moving from the 103 level to the 113 level, while the base trend and the fib levels derived from it are still compared to the same $20 range marked by the current positions of points 1 and 2. Generally, the greatest effect on fib extension levels comes from the distance of the base trend rather than the retracement of the base trend. When both the base trend and retracement of the base trend are moved, there's an extra substantial effect due to both factors at work. This example with the base trend range expanded from $10 to $20 and the retracement raising point 3 by $10 demonstrates the effect quite well with the 3.618 level, now towering at 185.36 for a $60 distance from the 0.618 level. Though nonetheless, this is still a distance that's 300% the distance of the base trend, exactly like the other variations of points 1, 2, and 3 at different positions. A fib projection is essentially a fib extension where point 3 is at the same level as point 1. It can be a result of a situation where a base trend is fully reversed and not technically a normal minor retracement from point 2 to point 3. However, the influence of the base trend is expected to continue as the chart continues back in the direction of the base trend after point 3. A fib projection can be made with a normal fib retracement that has the levels greater than 1 selected. It is literally the familiar fib retracement levels projected beyond the standard 0 to 1 range. As a result, there are only 2 points that define a regular fib retracement range and the distance of a fib projection's base trend. A normal fib retracement can be drawn backwards to cover an established trend and have levels projected past the 1 fib level. This means in an uptrend, start at the price level of a downswing and drag point 2 down to the upswing that began the uptrend. In the case an uptrend has been fully reversed back down to its starting point, a normal fib retracement can start with point 1 at the downswing point that began the original downtrend. Then drag point 2 down towards where an upswing recovers the chart towards point 1 and is expected to eventually surpass point 1 to newer highs. In this case, the reference trend for the fib retracement and base trend for the fib projection are also the same distance of $10, but point 1 to point 2 is based on a downtrend portion. That means the direction of the trend doesn't matter that much compared to the distance the trend covers in terms of the price range. In some cases, the fib retracement can cover a downtrend with point 2 much lower than the upswing that began the uptrend to point 1. Like with the fib extension, additional levels can be added. The 1.272, 1.414, and 2 levels are among the most common levels selected. In the case of a downtrend that is expected to resume dropping much lower, the same ideas apply in the reverse. A normal fib retracement can be drawn backwards to cover an existing downtrend's range. It starts at point 1 where an upswing has formed a retracement. Then point 2 is placed on the price level of the downswing that began the established downtrend that is expected to continue. In the case an established downtrend is reversed back up completely, the fib retracement can be drawn with point 1 at the upswing that reversed the established downtrend. Then point 2 is the point where the original established downtrend started and where a more recent downswing is reversing back down towards point 1. Often, the original downswing and the second downswing won't be at the exact same level. Choose whichever downswing has the highest absolute high price. In some cases, a fib retracement may simply reference an uptrend instead of a downtrend, where point 2 is much higher than any other point, and is the site of a downswing that begins a large-scale downtrend. Just like before, additional levels can be added. The 1.272, 1.414, and 2 levels are among the most common levels selected. Even though there's no point 3 to shift the fib projection lower, the levels can often cover a large distance. In fact, fib projections often cover larger price ranges because they can have a base trend that covers a larger distance, which will normally have a greater effect on the distance between the levels past the 1 level. Now let's get to applying Fibonacci extension analysis. The purpose of fib extensions is to identify opposition to a large-scale trend. It can be major or minor support against a downtrend, and major or minor resistance to an uptrend. Points 1, 2, and 3 are often placed at the start of what is expected to be the reversal of a previous substantial trend. Fib extensions are commonly used at the first signs of a new trend. For example, the very first higher upswing after an initial upswing has reversed a downtrend and retraced down slightly, but not below the point of the first upswing. The base trend can be extended and referenced for later retracements in order to cover large increments between extension levels, in the case of steep trends that may also have larger retracements. When there are major market corrections or even crashes, it can be quite beneficial to cover a larger distance with the base trend and reach a further retracement for point 3 in the trend's development. Larger retracements often have smaller retracements within them. In other words, minor swing points within the trend that is the retracement. In such cases, not much is different. The absolute highest and lowest points are used for points 2 and 3 of the fib extension, while the other swing points in the retracement range are usually not used. In most cases, the 1 level and the levels greater than 1 are used in fib extensions. However, levels below 1 can also be used as extension levels, especially when larger base trends retracements are used. If the levels under one cover swing points, that can be a bonus to confirm the validity of the fib extension, but it's not necessary and certainly won't happen all the time. It may not even be possible in many cases where small base trends and retracements are used. Trend lines can help determine which extension levels may oppose a trend more, but they are often not useful since movement often steepens significantly after a base trend retraces. A base trend and retracement that increase in volatility can often reduce the effectiveness of extension levels, since price varies widely after point 3. However, it's not uncommon for single candles to cover multiple extension levels near their open, high, low, and close prices. If possible, use a larger base trend when the chart becomes more volatile. In this example, it was not possible at the time. Likewise, a base trend that starts out highly volatile can also reduce the effectiveness of fib extension levels. This is true even when the chart decreases in volatility with the retracement and beyond point 3. It's largely due to the distortion of fib proportions from the volatile start of the base trend. Using a larger base trend and retracement can help lessen these effects of distortions from greater volatility, but usually only to a limited degree. Fib retracement levels often identify the approximate areas of suitable swing points to use for points 2 and 3 of a fib extension's retracement. This can be done from various swing points that approximate retracement levels. The technique can be very useful when a chart is approaching new record highs or new record lows. Fib retracements can also identify suitable swing points for a fib extension's retracement, even if the base trend and its retracement are larger. This will, however, normally result in less precision. It's normally a situation due to large movements influenced by broader market factors. Extension levels can be reused to validate later fib retracements. This can be seen with the volatile but major swing points taking place at the 0.786 and 0.236 levels after the chart eventually moved past extension levels identified on the previous charts of fib extensions. A fib retracement can often be drawn starting from the swing point at a previous extension level and have at least one level validated with a swing point forming at the approximate area covered by a current retracement level and previous extension level. In this example, a fib retracement starts from the swing low that was crossed by previous fib extension levels that's now where the one fib level is at a price level of 68.10. The same occurs with the 0.236 fib level now at a price level of 125.77, which is also covering the approximate downswing identified by earlier fib extension levels. Whether it's a fib extension, retracement, or projection, it should be remembered. Fibonacci techniques realistically identify approximate areas more likely to form reversals. It's unrealistic to expect fib levels of any kind to run through the exact highs and lows on a chart all the time, especially when volatility increases. It's helpful to use a longer time frame like a weekly chart to easily identify a major trend that has reversed. In this case, a long-term uptrend is sharply reversed down. 3 methods falling price action is also in progress. Go to a shorter time frame and mark the reversal of the major trend, along with the start and end of the retracement. Just like other fib methods, use the absolute lows and highs of these swing points. Here it makes little difference that point 3 is marked at a slightly lower swing point, but the mistake can be more significant if, for example, the retracement ended at a higher price like 68, around $10 higher. The highest point of the retracement is preferred even when 2 or more downswings approximate the same level to end the retracement of the new developing trend. As the larger downtrend resumes, even fib levels less than 1, such as the 0.382 or 0.618 levels, can have potential to oppose the drop. This is because of the base trend covering a greater distance due to the continued drop after the gap down. In this case, the 1.618 level identifies the most significant opposition to the downtrend. It's an approximation and not exact since upswings form around 2308 and not exactly on it. This is realistic because the exact lows won't always be pinpointed. Levels from fib extensions can also identify retracements and opposition to a new uptrend. However, this is more suitable for a fib retracement using swing points from the old downtrend. The primary purpose of a fib extension in this example was to identify opposition to the progression of the old large-scale downtrend. Alternatively, a base trend for a new fib extension could be drawn from points in the new uptrend. It's common for extra emphasis to be placed on certain levels such as 0.618, 1 and 1.618 as being more significant. While major reversals often take place at these levels, it's not uncommon for them to miss major reversals. All fib levels can be the site of minor and major reversals. It's more beneficial to examine the shorter-term price action at a fib level and reference the longer-term context in order to place more emphasis on certain fib levels. It's also important to remember fib levels of retracements can still be breached and passed. No matter which fib technique or level is used, the levels are simply approximations of greater reversal potential and not complete guarantees of revealing the exact lows and highs of a chart. Just like fib retracements, fib extension levels can gain further validation when they run through past resistance and support areas. However, this may not always be possible, especially when new record highs or lows are reached. It's preferable to use the first retracement of a base trend to draw a fib extension before trying later retracements to the base trend. If the chart begins to flatten into more range-bound movement after point 3, followed by a major break of the flatter range, it's possible the extension levels can be less useful. Just like other forms of technical analysis such as chart patterns, fib techniques can still generally be used after a stock's price has been split multiple times. In this case, a fib retracement identifies some possible swing points to use for points 1 and 3 in a fib extension. Recall from the diagrams that the base trend affects the distance between the fib levels, while point 3 determines how high the entire fib extension is positioned with all its levels. Point 3 will match the 0 fib level. However, points 1 and 2 will vary depending on which swing points are used to define the base trend. That's why it's not uncommon to see point 2 not match an exact fib level. In this case, point 2 is at 71.55, which is close, but not an exact match to the 0.5 level from the fib at 71.66. All this is just a reminder that fib extension levels generally have less potential for their levels to be validated compared to fib retracements. A mistake, like moving point 3 to a point slightly higher from the absolute low of the retracement, has a marginal effect. However, this should be avoided, especially since the entire fib extension can be drastically altered if point 3 moves further away from the absolute low of the retracement. A gap up closing on the 1.618 level doesn't get filled, and the chart proceeds to reach newer highs to demonstrate an aggressive trend can still surpass a major extension level near previous record highs. Certain levels, such as the default 1.618 and additional 2 level, are among the most famous fib extension levels. A lot of significant price action can often take place at those proportions. However, the use of a fib level or levels is a matter of personal preference. Significant price action can certainly take place at other levels, and is highly variable depending on the broader context of the chart and developing short-term conditions. Certain fib levels can be preferred, but it is not an absolute guarantee a trend will pause or completely reverse because the chart contacts a certain fib level. As seen in the diagrams before, a larger base trend can significantly widen the distance between fib levels, which can often result in lowered precision. It's similar to how larger fib retracements can generally approximate more significant swing points, but tend to be less precise and miss the swing points of smaller scale retracements. The effects of a larger base trend are even more significant when its retracement is also larger. On this chart, it was a mistake to place point 3 at the upswing low of the large gap down candle. It would be more correct to place it at the next upswing point slightly lower. However, as seen later, there was only a minor distance between the two upswings, which resulted in a minimal impact on the extension proportions. A trend line drawn with price action within the range of the base trend can help identify when certain extension levels could present greater opposition. This chart has a stable but fairly imprecise uptrend. However, this is quite a good result considering trend lines are more difficult or impossible to draw to intersect with extension levels, because the trend will often steepen after point 3. Trend lines are supplementary and not a primary form of analysis since they have reduced effectiveness in the context of fib extensions. Multiple trend line variations can help, but the result on this chart is a less common successful result of a trend line within the base trend range, precisely intersecting with multiple fib extension levels. Whether it is a few weeks or a few years after an IPO, a fib extension can determine potential ranges where a trend can experience opposition at new record highs. Conditions for an effective fib extension are most suitable when an established uptrend has consecutively higher upswings and downswings. The uptrend was relatively stable prior to December, considering it was only a few weeks after normal tenuous trading following an IPO. Naturally, wider price fluctuations reduce the performance of compact fib extensions. A more common scenario has an uptrend line being less effective to intersect with extension levels. The addition of the less commonly used 2.414 and 2.272 levels more closely approximate the volatile downswings in December. Adding additional extension levels with the default fib levels can help add more detail, but can crowd the chart with too many fib levels in close proximity when the base trend covers a relatively narrow range. The previous fib extension technically didn't start at a reversal point, but that was acceptable since the low used on September 21st, one day after the IPO, was the only price action available. This was also near the significant IPO price range. However, a proper swing point should always be used. This is a rare exception due to the stock just listing on the market. The new fib extension demonstrates how a larger base trend can help widen the distance between fib levels to cover wider ranges when volatility increases. A smaller base trend and retracement result in many fib levels having reduced utility because they're compressed too close together. The result is too many fib levels crossing the same swing points, especially with larger candles during the wider price fluctuations in December. Alternatively, an even more compact fib extension can be used, but it's useful to not add additional extension levels and keep the wider increments between the more common default fib levels. This demonstrates how various different fib levels can identify the same reversal areas and the various effects on a fib extension depending on the positions of points 1, 2, and 3. The uptrend line was quite ineffective with the fib extensions, but it identified the approximate end of a head and shoulders pattern. Now the fib extension could be used to identify support to the developing downtrend under record highs. However, it's normally better to use a fib retracement for this purpose. A gap down accelerating a head and shoulders reversal provides convenient levels to plot a fib extension, as consecutively lower swing points are likely. Even though the right shoulder has such wide price fluctuations, resulting in no clear long-term swing points, the absolute high of the developing downtrend's upward retracement starting from January 6th at 136.43 clearly ends with a sharp high on January 25th at 167.30 to plot point 3. Here's the opposite of the uptrend from the IPO. A volatile downward reversal from the head and shoulders begins to stabilize with smaller price fluctuations towards April. That means even though the base trend and retracement cover a small range, the extension levels lose less precision since price action covers a narrower range when the trend begins to decelerate after the gap down. The greater volatility with upswings in May and March serve as a reminder of reduced precision from rapid price fluctuations. They also demonstrate how fib levels of all kinds are more realistically thought of as approximate areas of potential opposition to a trend, rather than exact guaranteed reversal levels. Levels between 2.618 and 3.618 could have been selected. However, in this case, it is also possible to extend the base trend down to the next upward retracement. The wider increments between fib levels are suited for capturing the wide upswings, and demonstrate a case where levels below 1, like the 0.236 and 0.382 levels, are the site of clear reversals after point 3 of the fib extension. Back-to-back bearish and bullish reversal candles can take the place of full swing points during aggressive trends, particularly aggressive trends to new record highs or lows. Fib retracements can help identify suitable swing points for fib extensions, even when more complete swing points develop on the chart. The downtrend retraces from the peak at 3,000 to the 2050 low on June 15th. Point 3 was not moved to the end of the larger retracement in mid-July because that would have lowered the fib extension levels as the aggressive uptrend resumed. The extension levels were quite precise even when volatile downswings formed. It looks strange to have point 3 not extended down to the lower mid-July upswing, but this is an exceptional case due to the steep uptrend. Even a marginal lowering of point 3 would have greatly decreased the precision of the 4.236 level in November. As new record highs are reached, a new fib extension covers the same general price range with newer swing points for points 1, 2, and 3. However, the results aren't much different due to the small base trend and retracement in the same general price range. A larger base trend and retracement are much more useful. Note, there's still imprecision when larger price fluctuations take place. Not all swing points are covered by default fib levels, but that's of less concern with larger and sharper reversals. Sharper reversals would be obscured if too much detail was covered with additional fib levels, such as between the 2.618 and 3.618 levels. An uptrend line derived from upswing points can be helpful for other purposes, but is of little use in combination with fib extension levels meant to identify potential areas of resistance at even newer record highs. This historic case of Bitcoin price climbing demonstrates how fib extensions continually need to be adjusted and redrawn when there are rapid and large price movements. These kinds of situations also highlight scenarios where larger base trends and retracements are the best option. A stable uptrend line in this context would only be useful for identifying stronger support to oppose large corrections that don't take place. The moderate retracement from previous highs at 7,895 provided an opportunity to use a fib retracement to identify a minor pullback. This provided valid points for a fib extension. An uptrend line derived from downswing points was helpful to a limited extent in highlighting the breakout area to new highs in late November. This breakout is the normal steepening of the larger trend after point 3, seen with other examples. Unlike the previous example of Unity stock peaking at record highs with compressed extension levels, this chart is able to utilize additional extension levels with less issue due to the larger base trend widening the increments between fib levels. However, there's still lowered precision from the extraordinarily wide price fluctuations. Even though the peak at the 2.272 fib level had clear bearish price action, it would be more realistic for most market participants to realize the long-term shift downward as more than a moderate retracement by the start of 2018 at the earliest. A fib retracement can now replace the previous fib extension to identify more significant swing points. A new fib extension based on the established downtrend is more appropriate than the previous fib extension based on the reversed long-term uptrend. Fib retracement levels help identify more suitable swing points for the fib extension that can provide finer details compared to the large fib retracement. That means point 3 is likely to be less appropriate compared to using the downswing before it, even though it forms a more valid long-term downtrend line. Here's another case where the trend starts off volatile and begins to stabilize with narrower price fluctuations as the trend decelerates. That means the extension levels are even less precise in identifying potential support levels that would oppose the downtrend. Using that last downswing point in 2017 closer to the fib retracement level produces significantly better results despite the relatively small distance between these two downswing points used for point 3. The base trend is extended to cover more area as the large-scale downtrend slowed but still progressed lower. It was unfortunate point 2 wasn't close to a fib retracement level from the previous large fib retracement. However, it may not be possible to have all fib extension points align with fib retracement levels. Fortunately, point 3 formed a downswing near a level from the old large fib retracement and forms the final downswing before the steep long-term downtrend line is eventually broken. This large fib extension highlights another case where levels below 1 identify major opposition to a trend. Using the slightly lower downswing point for point 3 was a technical mistake but had less of an impact. This is due to it being part of a relatively flat double top reversal from February to March 2018. It is also near a level from the old large fib retracement and the previous downswing used for point 3. Price action also began to stabilize significantly compared to the period before the downtrend line was broken. The narrower price fluctuations after the downtrend line was broken also provide for suitable conditions to use a smaller base trend and retracement to capture smaller swing points as the chart drastically decelerates before and after the 2019 New Year. Using a slightly larger base trend and retracement is also possible. This case demonstrates another instance where different fib levels can identify similar areas of opposition to a trend depending on the various swing points used for points 1, 2, and 3. Like other examples, this phenomenon is more likely when price fluctuates less rapidly. With trading decelerating into more range-bound phases, a large base trend will be even more imprecise and less useful with a smaller retracement. A relatively smaller base trend was most suitable even after the large November drop, which had a noticeable but not significant impact on the precision of the extension levels. Moving point 3 to the high of the long upper wick in October could have limited these issues. It was a higher point and a sharp retracement that marked the first drastic price fluctuation in a long time prior to the swift November drop. Like fib retracements, it can sometimes be possible to validate fib extension levels with past reversal points. Using a trend line is once again a complementary mark to extension levels and not a primary part of analysis. A steeper acceleration commonly seen after point 3 limits this downtrend line's precision, that was actually quite decent compared to other examples. A stable uptrend after some sharp drops leads to a series of narrow retracements. This results in a compressed fib extension when using the first retracement in the developing uptrend, since the initial base trend is relatively small. Subsequent retracements are approximately the same size, but the base trend can now be expanded to widen the spacing between fib levels. This becomes helpful as the chart returns to an aggressive but stable uptrend with swift movements into newer record high ranges. Extending the base trend even more is a suitable course of action as the rise steepens without larger retracements for the rest of 2020. When larger retracements begin in 2021, it's suitable to plot a new fib extension with a relatively large base trend at higher swing points. This is done to an extent, but using swing points above 20,000 for points 2 and 3 would be more preferable after the moderate retracement became apparent by late February 2021. However, the extension levels are still adequate in approximating significant resistance opposing the uptrend. rather than precise identification of exact downswings. This is acceptable since major price fluctuations took place to form a head and shoulders reversal similar to the start of the Unity stock chart example. Within a year of trading, a Fib retracement outlines large trading ranges despite rapid price fluctuations. Going from the weekly to monthly time frame is helpful to more clearly define the more substantial swing points. Going to a shorter time frame with the daily chart reveals more detail. The main focus turns to a double top reversal and retracement of an establishing downtrend. All three swing points closely approximate the large Fib retracement levels for additional validation of the Fib extension points. The downtrend lines can be useful, but like with other examples, their direct use with the Fib extension is likely to be limited. The classic double top reversal reveals how Fib extension levels tend to oppose a trend more at areas where extension and retracement levels are close together. However, it does not necessarily mean these will always be the areas of larger reversals, as shown by the reversal on the 0.786 extension level at the 1402 price level, where there's no close Fib retracement level. As the downtrend drops below the Fib retracement range, it is a reminder that no Fib level or levels can guarantee an exact reversal all the time. Shorter-term price action understood within broader context is necessary for a more comprehensive picture. A large-scale reversal takes place around the 1.618 extension level, but it's not precise due to the sharper and wider price fluctuation in early March 2020, along with wider proportions between the Fib extension levels from a larger initial base trend. As usual, Fib extension levels can be used when the major trend starts to reverse, but a large Fib retracement is another option to identify areas of potentially greater resistance to the developing trend. Downswings near retracement levels provide plenty of choices for point 2 of a Fib extension. As in most cases, it can be helpful to start with the very first retracement even when there are other choices further up in the trend. This allows Fib extension levels to be validated with swing points from the old downtrend and current uptrend in a similar way to Fib retracement levels. However, this results in a small base trend that can yield less effective proportions between Fib levels as the trend produces larger and accelerated movements. Regardless of the size of the base trend or reference trend, Fib extension and retracement levels are less precise in identifying major downswings from sharp and wide price fluctuations. This is especially pronounced with the sharp peak towards the 20 boundary in February 2021. Extending the base trend improves results, but lost precision is still normal and to be expected in the case of such a sharp peak. Since HMMJ was an ETF, and ETFs are generally less volatile than individual stocks, the chart of TLRY stock that is related to the broad sector covered by HMMJ will demonstrate the increased impact of greater volatility. During similar market conditions during the same approximate time period, TLRY starts with an even greater reversal from record highs. A Fib retracement also helps identify more suitable swing points for a Fib extension. Point 2 of the extension is at the first slightly lower downswing rather than the next downswing that is slightly higher. This choice was made since it would have point 2 closer to the 0.5 retracement level and lower the overall extension as the downtrend began to accelerate into December. Adjustments made little difference in the next 2 years since the volatile start to the downtrend began to settle into more narrow ranges on a more gradual slide. A smaller base trend that already accurately captured opposing support on its 0.786 level was an alternative to reduce the wide distortion by the first choice for the base trend during the continued contraction of price fluctuations into 2019. Results are marginally different, but the narrower Fib extension is still quite imprecise due to the distortion of the sharp peak in 2018. On a side note, the IPO price range is a natural area of importance and provided a good reason to add the 1.272 and 1.414 levels for additional detail between the default 1 and 1.618 levels. As the chart rapidly changes between steep drops and flat trading, a new Fib extension starting from a sharp peak provides another example of lowered effectiveness due to rapid and sharp price fluctuations. Even though conditions aren't as volatile as before, price action is still highly varied, and a smaller base trend only makes a minor difference as precision is still lost. In these kinds of extreme conditions, there is less that can be done to improve precision. One alternative is to find the most stable base trend and retracement possible that has point 3 immediately followed by a steep acceleration, such as gaps and or 3 black crows type price action. Doing so helps reduce distortion from volatile swing points for points 1 and 2. This is certainly helpful, but distortion and imprecision should still be expected in such volatile conditions. After several splits and stock market crashes, the longer-term uptrend can continue as price recovers. This will be a good example of a large fib extension applied over a long time range during a developing recovery that has the potential to eventually pass previous highs. By mid-2013, a large ascending triangle becomes clear along with a rough uptrend line from the March 2009 lows. The previous fib extension with 0.3 at 55.46 was acceptable since that was the end to a first clear retracement. Moving 0.3 to 53.95 at the next slightly lower upswing produced marginally different results. This choice was primarily made for greater confluence to have 0.3 at the absolute low of the bullish continuation range that mainly consisted of the ascending triangle. This also intersected with the larger uptrend line. Moving 0.2 to the next downswing that is slightly lower was also done for greater confluence with significant swing points that mark the start of the main ascending triangle outline. These adjustments were not entirely necessary. They were mainly done to more closely approximate points from the fib extension with a significant continuation pattern that was the ascending triangle. It wasn't a mistake to have made the adjustments to more closely approximate the ascending triangle with points 2 and 3. That would be a common choice to have more confluence with the swing points. However, the better route was to have the same approximate distance for the base trend, but a smaller retracement to not lower the entire fib extension as low. The higher fib extension levels would likely be more beneficial once the bullish acceleration began and continued after the ascending triangle completed, and before the sharp peak into 2019. A fib retracement reveals all ascending triangle swing points had greater validity to be used for a fib extension since they formed near fib retracement levels. Instead of using the large fib extension from the sharp March 2009 upswing and ascending triangle, an alternative would be to use swing points from the period when the ascending triangle acceleration began to slow down. The choice to also move down to the weekly time frame allowed for greater detail during the substantial 2018 correction. The combined factors of this still being a longer time range and the steep drop from April to May 2018 resulted in relatively low precision. This was to be expected even though the base trend and retracement were relatively stable in comparison to the period after 0.3. Moving down further to the daily time frame helped with even greater detail and slightly more precision, compared to the general approximations of the previous extensions that covered much longer time ranges. After the gap and general 3 Black Crows price action ended with a near absence of bearish volume spikes on May 3rd, the downtrend was not over, but had significantly decelerated. This provided the opportunity to use a larger base trend and later retracement to cover more suitable proportions in the progressing downtrend. The upswing in late June on the 0.618 level also validated the fib extension to a degree in terms of its ability to capture the more moderate support opposing the downtrend. Precision is still generally lower at the sharper swing points, but this is a far better result than the overly wide proportions from the fib extension in the broader weekly time frame. Validation on the 0.618 level was important as many subsequent upswings were of a similar proportion. This kind of validation is not a certain guarantee of greater accuracy, and it may not even be possible in some cases. It's simply a complementary addition to enhance the reliability of the fib extension levels. Price moves well under a fib retracement range, but a sharp upswing approximating a more refined ascending triangle uptrend line. It points to some major support opposing the downtrend around the same area as the 2.618 fib extension level, and to a lesser extent the moderate upswing point on the one level of the fib retracement. Using fib retracement levels to identify suitable swing points for points 2 and 3 of a fib extension proved to be quite effective, similar to other examples. Note how even though a sharp upswing opposed the downtrend at the 1.272 extension level and 0.786 retracement level, it wasn't a complete guarantee that area would be an exact bottom as demonstrated by the sharp drop through that area in early 2020. As usual, multiple fib levels can identify the same approximate areas of opposition to a trend depending on the points chosen for the base trend and retracement of the base trend. Similar to other examples, 0.3 can have an effect on the overall fib extension, but it's usually a minimal impact when multiple swing points approximate the same range, such as the downswings in the 180s. Slight variations can often be made with the position of 0.3 when multiple options for 0.3 have several downswings grouped close to a fib retracement level. This demonstrates how there can sometimes be several ways to arrive at similar results and use fib levels under several variants depending on the swing points chosen. Extension levels having confluence with retracement levels and trend lines often reveal areas of potentially more significant reversals and retracements. However, this is not always necessarily the case. Major reversals can still take place at single fib extension levels with little to no confluence, especially at new record highs or new record low ranges. Since the base trend is essentially the foundation that determines a fib extension's proportions, it's not. Surprising moderate opposition can often take place at approximately 100% increments of the distance of the base trend. This is an interesting general observation and not a necessary part of primary analysis with fibs. The 100% increments of a base trend can also line up with significant areas such as the upper boundary of the ascending triangle in this example. It is possible for decisive price action to take place at approximately 100% increments of a base trend's distance, except starting from point 3, though this is to a far lesser extent. Let's now look at examples about the purpose of Fibonacci projections and suitable conditions for their use, meaning the use of the regular fib retracement tool with projected levels beyond the one level. A fib projection can usually be used in many of the same conditions a fib extension would be applied. Fib projections can be chosen over fib extensions when the distance from a base trend to a clear retracement is too large and would result in overly wide proportions between fib extension levels. In some cases, a fib projection is used because a new trend begins without retracing yet. If a new trend begins, but there has so far been an absence of clear retracements, it's possible to project fib levels based on swing points from the previous trend that usually has clear swing points prior to its reversal. In this example, we see the common phenomenon of a swing point used from the old trend for the one level, which will normally at least line up with an area of flatter price action in the new trend if no full or clear swing points have developed clear retracements yet. Point 1 may also line up with reversal candles and price congestion in the new trend. In fact, the new trend can be entirely irrelevant even when there are clear swing points in its early stages. A fib projection can simply be drawn with point 1 at a clear swing point in the old trend to the reversal point into the new trend. Price action transitioning from an old to a new trend can often be just as influential in projecting fib levels as price action during the development within a new trend. Aligning point 1 with clear swing points or price congestion in the new trend is only an additional layer of validation that isn't entirely necessary. A fib retracement can also be used to find more suitable swing points for point 1, as well as possible confluence areas to identify more significant fib projection levels that form closer to fib retracement levels. It's also common to use fib projections from swing points that define the boundaries of flatter range-bound reversal formations, such as a double top. Naturally, this can result in more compressed proportions between the fib projection levels. Starting a fib projection with point 1 at a swing point near a fib retracement level demonstrates how there is a similar phenomenon to fib extensions, where increments of 100% the distance of the base trend tend to identify potentially stronger areas of opposition that form near retracement levels. This is seen with the 3-level crossing the support base where price drastically reverses into 2009. However, the break under the 2-level at the 73.33 price level still demonstrates how a strong trend can still breach a potentially more significant grouping of fib levels. Watching short-term price action development such as that of chart patterns in the broader context is still essential instead of relying on fib levels alone. Sometimes it can be a matter of preference in terms of which sections of price action on a chart will be used for analysis. For example, a double bottom reversal resulting in a clear uptrend with consecutively higher upswings and downswings provides suitable conditions for the use of a fib extension and a fib projection. A fib extension will first base analysis on the initial swing points of this new trend. The one level conveniently lines up with current and past downswing points around 2016 in the low 50s. It indicates the initial base trend distance as an appropriate proportion because the chart doesn't significantly increase or decrease in terms of the size and frequency of price fluctuations as the uptrend progresses. Given the moderate retracements within the uptrend towards 2017, it would not make sense to use the narrow range of the double bottom for a fib projection's base trend. Instead, it would be more suitable to use the same base trend distance as the fib extension, resulting in not having distances too wide or too narrow between the fib levels. This demonstrates how a fib projection can also use price action from a new trend that can even be the exact same range as a fib extension's base trend. The bullish acceleration after the double bottom completes isn't exceedingly steep. Nonetheless, it is not adequately covered by the smaller increments between fib projection levels. Downswings opposing the uptrend do approximate some projection levels, but the overall precision of the projection levels at downswings is quite low. A clear and valid fib retracement covers the final section of the previous downtrend. The fib retracement levels run through many clear swing points. The projection levels perform adequately, but there is less precision because price fluctuations are narrower into 2017. Lowering point 1 still produces a valid fib retracement. except this one strikes a balance and captures the most minor to moderate reversals and retracements within the final leg of the downtrend and start of the uptrend. These proportions are more suitable for the minor to moderate price fluctuations that continue towards 2017. The increased coverage of swing points in the retracement ranges below the 1 level carry over to the precision of the projection levels above the 1 level. When a trend begins on a steep angle, a suitable retracement for a fib extension can be difficult to find or may not even be present. In this example, the closest thing to a retracement is the minor neutral to bullish phase of 3 methods falling price action. This produces limited results as the trend continues on the same approximate trajectory for most of its duration. The next lower 3 methods falling formation is also not a full retracement and produces even worse results. An even lower 3 methods falling formation produces the best results so far. This is purely by chance in the absence of any complete retracements. In such a case where a new trend begins on a steep angle and doesn't produce any clear and complete retracements, a large fib retracement from the old trend can be a better alternative. As seen before, a fib projection starting with point 1 from a swing point near a large retracement level is another additional route. These techniques produce fib projection levels that are based on the end of the old trend, rather than an extension that is based on sections of price action from the new developing trend. As usual, the closer proximity of fib retracement and fib projection levels generally points to areas of potentially greater opposition to the trend. There are similar results when point 1 of the fib projection is taken down to the closest upswing point to the next fib retracement level down. Naturally, this extends the distance between projection levels and places different projection levels close to different fib retracement levels. Going back to the technology sector ETF chart used to explain fib extensions allows for a comparison and contrast to the application of fib projections. The upswings around the 0.236 fib retracement level in early 2018 are volatile. They could be used but could distort the fib projection slightly. An alternative is to use the stable double top range. This produces limited results due to the increased volatility and bearish acceleration towards the end of 2018. It was best to use the default fib projection levels without any additional levels selected since the proportions were narrower between fib levels. Even then, the volatile downtrend led to less precision, despite having the 3.618 level in close proximity to a retracement level. The better option in this case was to stay with the closest upswing low to the 0.236 fib retracement level for point 1. This led to wider proportions between fib levels that was suitable for the rapid and sharp price fluctuations towards 2019. Though, as expected, the volatile upswings from 2018 did produce some distortion and imprecision with the identification of levels that would likely oppose the downtrend. During the upward reversal from late 2018 to early 2019, there was a sharp early retracement for a fib extension to reference. However, that would result in narrow proportions not suitable for the steepening uptrend. A wider base trend for a fib projection from the end of the downtrend produced wider proportions, but the results were quite imprecise due to the greater volatility still present at the end of the downtrend. Interestingly, there is slightly better performance most noticeable at the 2 and 3.618 levels. This is a less common occurrence but does happen occasionally. A fib projection using the first up and downswing points was a bad choice from the start of such a steep trend in development with its compressed proportions. If price action from the new uptrend was chosen, a fib extension was the better option using a larger base trend up to later retracements. If the use of a fib projection was preferred with the old downtrend, covering the entire range of the double top reversal was the best option for the best projection levels. This allowed for stable price action from the top of the double top for point 1 and larger proportions for fib projection levels as the new uptrend began to accelerate. A clear uptrend establishes to immediately provide points for an initial fib extension after the IPO. The trend in the first month is quite stable, and it's best to use the longest base trend possible during that period before the greater frequency and sharp price fluctuations starting in June. Fib projections using the same base trends provide similar results. Similar to the fib extensions, the proportions are quite compressed due to the narrow stable base trend ranges available shortly after the IPO. As usual, it is helpful to limit the number of additional levels or simply not select any additional levels in between the default levels. The sharp long-term reversal and retracement provide familiar conditions suitable for a fib extension. The initial moderate upswing starting the recovery and its sizable retracement are excellent features to accommodate the steep acceleration towards mid-2020 and the subsequent moderate corrections. However, it's once again helpful to reduce the number of additional extension levels to reduce clutter on the chart. A fib projection produces similar results and also crowds the chart with too many additional levels added. An alternative is to draw a regular fib retracement to capture retracements at the end of the large downtrend and the start of the new uptrend. The projection levels are spaced further apart to generally capture the more significant downswing that opposed the uptrend later. This reduced clutter from compressed fib levels and naturally reduced precision with fib levels missing smaller swing points. The application of a large fib retracement capturing the entire downtrend range provides another example where retracement and projection levels tend to group closer together at areas that can present greater opposition to a trend. This example of GameStop stock chart will provide an extreme case study in terms of major price movements. Similar to the previous BYND example, a large downtrend ends with a moderate upswing and retracement, providing the basis for a fib extension to cover a rapidly accelerating uptrend. Unlike the previous BYND example, the uptrend constantly breaches and surpasses multiple extension levels. Such an aggressive trend calls for a larger base trend. A major landmark such as the break of a channel provides suitable points for points 2 and 3. It's similar to how a major continuation pattern, like an ascending triangle, can identify suitable swing points for a fib extension during the development of a rapid uptrend. Similar to the Bitcoin example, a rapid and large-scale trend during historic market conditions often needs to have fib levels constantly adjusted regardless of the fib techniques being used. Like the previous BYND example, a broader range for a regular fib retracement can provide wider proportions to cover a major shift in the market. Unsurprisingly, even these wider proportions are only useful for a limited time. Given the price action prior to March 2019, it was adequate to use the sharp downswing that continued the larger downtrend after the brief pause into a bullish to neutral range from early 2018. A better alternative would have been to capture the even sharper and more significant price action before and during the gap down that made a long-term downward continuation more likely. The 1.618 level is normally an area of strong opposition. In this case, it was, but it was still necessary to observe short-term price action in the broader context of the large downtrend. This saw a bearish buildup gradually forming lower swing points through the 1.618 level. In the case of the 2.618 level, it was also crucial to watch how continued support flattened the downtrend and led to more bullish formations towards April 2020. Even with the benefit of hindsight and a large fib retracement, it is realistic to still miss some major reversal points with fib levels given the extreme conditions. Most notable is the upswing towards March 2021 that could still be identified in a stronger range of support by referencing the area around the break of the upward channel. This highlights how even basic technical analysis can supplement for the shortcomings of fib techniques or other methods during extreme conditions. This example starts with a relatively horizontal range in between the sharp end to an uptrend and the rapid start to a downtrend. A moderately sized base trend to a minor retracement forms a fib extension with extra validity from the 0.236 and 0.786 levels crossing near the boundaries of the gap down. There's an excellent balance with the proportions between fib levels not being too wide or narrow, partly because 0.3 is a swing point just before the gap down acceleration. The one level did strongly oppose the downtrend, but short-term price action had large bearish candles continue to gradually close lower after the gap down as bearish volume increased. The end of the downtrend was at the site of the less common 2.272 level, where bullish reversal candles began to flatten the downtrend at the start of September with a rapid shift to more bullish volume. Using the small retracement after the gap down produced similar results, but was not a first choice since it resulted in narrower proportions between fib levels from a relatively small base trend distance. A fib projection using the first fib extension's base trend also produced good results due to the balanced proportions from the base trend. If there weren't gap downs in such quick succession, the fib projection using a smaller trend near a fib retracement level would have likely performed better with its narrower proportions. Moving down to the swing point close to the next fib retracement level was the better choice since it widened the distance between fib projection levels. This was most suitable given the conditions of large bearish candles and gaps accelerating the downtrend to cover wider price ranges. Going down even lower to swing points closer to the 0.786 fib retracement level reduced precision with the projection levels because proportions started to become too wide. However, results were still sufficient for approximating areas of greater opposition to the downtrend. A gap down fill after a relatively flat bearish reversal range provides suitable conditions for a fib projection to estimate areas of opposition to the likely continuation of the broader downtrend. A large fib retracement in conjunction with fib projection levels is generally less precise in narrowing down areas of greater opposition to the downtrend. There are swing points close to the fib levels from both fib techniques, but volatility is quite high with wide and sharp swing points in the previous uptrend and the new downtrend. Further imprecision comes from the widening distortion of the gap down. Interestingly, projection levels from the large fib retracement perform well. This is primarily due to the more suitable wider proportions between its fib levels as the downtrend continues to have rapid and sharp price fluctuations. Precision is still lowered even with close proximity to the 3.618 projection level of the smaller fib projection. This is to be expected due to the volatile conditions at the time. The upper 30s was also an area of major support, since it was the site of the key upswing in September 2017. However, it's still possible for a strong trend to break past this area, even with the strong confluence of the fib levels. A fib extension based on the gap down and a small retracement suffers expected imprecision due to the distortion from such rapid price fluctuations. Using a larger retracement improves performance because point 3 is at a more suitable area at the gap down fill that is a key part of the downtrend's continuation context. This leads to more appropriate positioning of the fib extension levels based on the proportions of the base trend that still uses the initial gap down drop. As usual, a fib projection using the same base trend as the fib extension can be simpler, especially when there are several possible points for point 3 to mark the end of the base trend's retracement. In this case, a less common scenario has a trend line quite reliably identify several areas of potentially greater opposition when intersecting with projection levels. Unlike previous examples of stock charts after an IPO, there's less clear and stable price action available despite a rapid recovery from an initial drop. This leads to a situation where a fib projection is much more suitable than a fib extension for quite some time after the IPO. A fib extension is more practically applied when a clear retracement develops in May. As a downtrend progresses, there's an immediate retracement to reference for a fib extension after the evening star candle formation is confirmed. The initial base trend and retracement end up producing suitable distances between extension levels, since price fluctuations don't substantially widen as the volatile downtrend moves lower. As usual, there's stronger opposition around the 1.618 level, which is also near the significant IPO price range. Despite this, there's a break lower with general descending triangle price action to end 2015. A similar situation could have taken place at the 2 level as well. That's why it is once again important to watch short-term developments closely within the broader context, regardless of the fib level that is contacted. A fib projection from the same initial downswing produces similar results, but is less precise with the upswing in late August 2015 around the 2 level. Even if a different fib level or technique was used, basic technical analysis referencing the IPO range would make up for this shortcoming due to the sharp upswing. The downtrend and recovery off new record lows allows for the suitable use of a larger fib retracement and projection to capture later reversals and retracements. The projection levels are also helpful at a later peak in new record high ranges despite increased volatility into 2021. This is mainly due to the clear swing points and wider proportions present in the fib retracement range. A fib projection based on the boundaries of the flat bullish reversal range is sufficient in capturing the approximate areas of the 2 major volatile downswings in 2018 and 2019. However, the previous variant based on a larger fib retracement was more suitable given the bullish and bearish accelerations after the bullish recovery began to steepen towards mid-2018 after leaving the horizontal range. Using the clear swing points from the larger retracement in the recovering uptrend for a wider range was another alternative. Naturally, once there was the dip to record lows in early 2020 under the 0 level at 4067, it was appropriate to move the retracement and projection to cover the larger downtrend that also had clear swing points. Now on to considerations for choosing Fibonacci tools. Starting with this Euro-Yen chart that shows a sharp peak can often be more suitable context for a fib extension. The rapid start to the downtrend results in a moderately large base trend and validation of the 0.5 level with several minor upswings. As usual, validation can also take place in a wider range, especially when multiple fib levels approximate areas of wide price fluctuations in the past and present. Like normal, a fib projection produces similar results from the same base trend range. In this case, the projection is slightly better mainly due to the positioning of the 2 level more closely approximating the start of the new uptrend. Validation was also possible with its levels below 1. In this case, the 0.5 level also coincidentally provided further validation, except with a downswing in mid-2014. As with any other technique, the choice to add a fib retracement is optional. In this case, the primary area of interest is not approximated as well by a fib retracement compared to the previous routes covered. Results are better for a fib retracement based on a smaller downtrend that has more swing points covered before the start of the new uptrend. The new uptrend has fairly decent coverage from a narrow fib projection based on a sharp but relatively small initial upswing in June 2016. A fib extension using the same base trend has similar results due to the uptrend remaining relatively stable and not significantly increasing in volatility after moderate bullish accelerations in 2017. This example has shown familiar situations where fib retracements are generally complementary to extensions and projections. Large fib retracements derived from steep trends with few swing points are generally not suitable alternatives to extensions and projections that can cover more detail and precision from small to large movements. These are familiar situations where projections and extensions are used from an establishing trend after the IPO. Although the uptrend is steep and volatile, it is suitable to use a fib retracement to identify support against the new downtrend. This is because of the large price fluctuations that continue for a large portion of the downtrend, which can be covered by larger fib retracement levels with fairly decent precision. When the chart accelerates to new record lows, there will still be a natural pause to slow the drop near the IPO price. This is also true for the 1.272 projection level that does offer substantial opposition to flatten the trend. However, like in past examples, the large price fluctuations and wide proportions between fib levels leads to lowered precision, as the downtrend maintains volatile trading around the 1.272 level and the $10 boundary for several years. A smaller fib retracement and projection produce a similar outcome, and only helps to cover smaller reversal points in the period before 2017. A smaller range can help with the period after 2016, but would require a section of price action under the IPO price range near the $10 boundary to avoid the distortions to fib ratios caused by volatile price action. Alternatively, additional levels like the 3 level could be selected to cover smaller details below the 2.618 level. Adjusting to try and reach a balance between the small and large fib retracement and projection ranges makes little difference. This is again due to the greater volatility and large price movements after the IPO that distort fib proportions regardless of the fib method used. Essentially, the problems of volatile price action can persist regardless of the swing points chosen. A fib extension, on the other hand, can use price action close to the time of the IPO because the base trend is smaller and additional levels such as the 2.272 and 2.414 levels can add more detail to cover smaller swing points after 2017. When the base trend of a fib extension is extended, it introduces the problems of larger and more volatile price movements that affect fib projections and retracements. Fib extensions, projections, and retracements can be adjusted for more reliability when referencing more volatile price action. However, reduced precision should still be expected even when results improve, such as with the 1 level in this larger fib extension. Even though fib retracements can't provide effective analysis after the chart has moved out of its range to new record highs or lows, it's possible to reference previous fib retracement levels to plot fib extensions and projections to cover opposition at new record high or low ranges. Here it's normal for the 0.236 level of a large fib retracement to not capture the upswing in the gap upfill range. Once price peaks in the low 120s, it is possible to adjust the fib retracement to raise the 0.236 level to approximate the gap upfill support where another upswing is not unusual. As new record highs are reached, there is a familiar situation where a fib extension can be combined with a fib retracement. Except in this case, areas of stronger opposition can't be narrowed down after the 0 level of the fib retracement. Instead, retracement levels like 0.618 and 0.236 can be used for highly accurate validation of the fib extension. After the new peak at record highs, it became clear by early November it was possible to switch to a fib projection that could have projection levels validated near the gap. The goal for a more reliable fib projection would aim to have more levels line up with swing points before and after the gap up. A narrower fib retracement doesn't have a projection level align with the gap up level, but it still maintains contact with many of the same swing points. More importantly, it has the 2-level contact the late October peak. Capturing the last clear downswing with a projection level normally improves accuracy of later projection levels at new record highs. This can be seen with better results with levels above 2 moving towards 2021. This example with the DAX demonstrates a broad use of fib analysis since it is a broad regional market index that covers a long time span and price range. Various uptrends and downtrends can be used for similar projection levels since the major trends cover similar approximate distances in terms of their price and time ranges. Since price action is so clear with a double top, a fib projection covering a relatively narrow range can still identify potential support opposing the downtrend. Then when a new uptrend starts into the 2010s, the same downtrend can be used as reference for a large fib retracement to identify potential resistance to the uptrend and support for retracements. Due to the larger candles on a monthly chart, it would be advisable to remove the fib projection levels after the uptrend began to establish to avoid clutter on the chart. Using a fib extension with a larger base trend produces similar results. It's still advisable to remove the extension levels when the fib retracement is applied to reduce clutter, or to focus more attention to areas where extension and retracement levels are grouped closer together. The fib levels from both the extension and projection can increase in precision by using a shorter time frame. Their general accuracy is still seen on the broad monthly chart, with many open, high, low, and close prices still concentrating around fib levels. When new record highs are established, projected fib levels from the large fib retracement can be helpful in determining areas where long-term resistance could oppose the continuing uptrend. The resulting downswings, particularly around the 2 level, are excellent results, considering there will be even more lost precision with such wide proportions between fib projection levels on a broader monthly chart spanning more than a decade. Just like examples with the shorter weekly and daily timeframes, a fib extension with the first upswing and retracement in the new uptrend is sufficient. There are similar results to the fib projection since the base trend covers nearly the same distance in terms of its price range. When new peaks formed at or below 13,000 from 2014 to 2020 near extension and projection levels, it was possible to identify approximate areas of potentially stronger support where the uptrend lines intersected with projection and extension levels. However, like with other examples, it is often more suitable to use a fib retracement since these are retracements within the larger uptrend. The wide-ranging price action forming upswings on the 0.382 fib retracement level in early 2016 and early 2020, along with the swing points on the 0.236 level, are reminders. Fib levels of all kinds are simply approximations. Even with the benefit of stable trend lines, it's possible to have lost accuracy with swing points forming on fib levels during volatile periods, regardless of the chart being viewed in a longer or shorter time frame. In this section, we'll take a look at using Fibonacci retracements like projections by expanding Fibonacci retracements to become similar to projection levels. This method is a quick approximation that can be used when a chart begins reaching new record highs or lows. It's a rough alternative to fib extensions and projections. Since fib levels from various fib tools often group close together, it's likely a trend dropping to new record lows will have retracements under its current lowest upswing point. These retracements are likely to be at a proportion 0.236 or 23.6% of the distance below the downtrend the current fib retracement is based on. A precise way to determine this area is to input minus 0.236 as an option for a fib level. The same can also be done for minus 0.382 and the other fib retracement proportions. These negative retracement levels may be an option on some programs. If they're not available, they can be entered manually as options for fib levels. An alternative route that is more practical and convenient is to simply extend the 0 level at the lowest point of the fib retracement down until the 0.236 level occupies the approximate area the 0 level previously occupied. This is, of course, a less exact method, but that is normal since this method is only used for rough approximations. The result will be the 0 level at a roughly 23.6% distance below the fib retracement that was based on a downtrend. This diagram has the 0 level at the exact 23.6% distance below the fib retracement for demonstrative purposes. More commonly, it will be a rough approximation that will be adequate to have the 0.236 level move down to the previous area, the 0 level occupied. This concept also applies to a fib retracement when a chart is progressing to new record highs. Except the 0 level is moved up until the 0.236 level approximates the previous location of the 0 level. When fib retracements are passed, it's likely a larger fib retracement can be drawn when there are eventually upswings at new record lows. In the case, a charting program has no negative retracement levels. The option to edit other inputs to negative retracement levels can be an option. Theoretically, stronger opposition to the downtrend can take place at the negative retracement levels. A large fib retracement would likely have retracement levels at those negative proportions if a suitable upswing eventually formed to draw a large fib covering the distance from record lows to downswings near the record highs. A rough approximation, taking the 0.236 level down to the previous area of the zero level, moves the zero level down to the same approximate area, the minus 0.236 level occupied. Just like with any other fib method, it is necessary to update fib levels to lower ranges as the downtrend continues. The same process is repeated to lower the zero level until the 0.236 level occupies the approximate area of the zero level's previous location. Similar to other fib analysis techniques, this expansion of a fib retracement suffers from imprecision during periods of extreme price fluctuations. Narrowing the proportions with a narrower range for the fib retracement can improve results, but usually only to a limited degree. Stable trends and clear swing points are also preferred like other fib methods. It's also likely smaller swing points will not be covered by expanded fib retracements when proportions between fib levels are wider. Once again, lowering the zero level by approximately 23.6% of the fib retracement's distance is an alternative for a rough approximation of possible upswing areas at lower ranges. Notice how, when a valid large fib can be drawn after a solid uptrend develops, the expanded 23.6% distance of the old smaller fib does move all retracement levels in line to approximate swing points in the previous downtrend and new uptrend. Even when using the exact inputs of the negative fib retracement levels, these techniques of expanding a fib retracement are primarily for identifying approximate areas that can oppose a trend. Negative retracement levels generally have similar proportions to extension and projection levels, which is why large fibs will often have retracements and reversals forming at previous extension and projection levels. This fib projection demonstrates how projection levels approximate the same proportions as an expanded fib retracement. A common situation in the stock market is to have a large trend with only a few substantial reversals that can usually be covered by one or two large fib levels. Naturally, these larger reversals can often be captured within the minus 0.236 portion at new record highs. It's possible for the larger trend to have more significant reversals at or above minus 0.382, but the expansion of a fib retracement usually only retains greatest reliability until the minus 0.236 level. A rough approximation by moving the zero level higher reveals retracements to a trend can roughly take place between the low to mid 20% range of the distance of a fib retracement that covers a large trend. Even if the large trend produces an aggressive break to new high ranges, it is less common for price to continue 1/4 the distance of a large fib retracement without at least some moderate opposition. Expanded fib retracements can often be a preliminary choice to identify a range of interest that can oppose a trend reaching towards new record highs. Once opposition to the trend appears with reversal candles and developing swing points, the various fib techniques can be applied. The one with a level closest to the current reversal or retracement of the larger trend is usually preferred. In this case, the 1.272 level of a fib projection more closely approximates the peak after the chart cleared the previous record high range around 26,000. This provides more recent validation of the fib projection being more suitable with its proportions for covering the progressing trend when the 30,000 mark around the 1.272 level was eventually cleared. When price flattens at a high range, such as around the 26,000 range from 2018 to 2019, there can often be several swing points for a fib retracement that can affect expanded fib retracement and fib projection levels. In this example, the downswing high on January 26, 2018 was superior to the downswing high from October 3, 2018, since it resulted in an extension with the 1.272 level approximating the next major downswing points in early 2020 at the 29,000 range. When returning close to record high territory in late 2020, there are clear recent downswings for a fib retracement, but no significant downswings are covered with expanded fib retracement levels when minor retracements take place at new record highs above the 30,000 mark. A rough approximation by raising the zero level, unsurprisingly, doesn't do much better to intersect a fib level with the minor downswings that take place above 30,000. A fib retracement with projected levels also has similar results. The reason for these poor results is due to the familiar problem of referencing a large trend range that produces wide distances between fib levels, which are not precise for capturing minor swing points with projected fib levels or expanded fib retracement levels. It's also similar to using too wide of a base trend for a fib extension that can't precisely capture smaller swing points when volatility decreases. The solution is the familiar choice of using a narrower section of price action from the old downtrend or the new uptrend that has projection levels align with recent downswing points for more recent confirmation of these projection levels, identifying opposition to the uptrend. Expanding a narrower fib retracement with negative levels yields similar improvements in capturing areas of smaller downswings and price congestion opposing the uptrend above the 30,000 boundary. The decreasing volatility of the progressing uptrend into the second half of 2020 demonstrates how a stable trend with narrower price fluctuations will often have minor to moderate retracements in a range of approximately 23.6% to 27.2% of a preceding fib retracements range when a chart rises towards new record highs. That's why even a rough approximation by moving the zero level of a fib retracement up can narrow down the range of a potential downswing after price moves above a fib retracement's current range. Similar phenomenon can be seen with a more aggressive uptrend that doesn't increase in bearish volatility too much by producing regular minor to moderate pullbacks during the climb to new record highs. Again, the rough approximation of moving the zero level of a fib retracement won't lose as much precision due to the stability of a trend like this. When a trend regularly encounters minor to moderate opposition to not produce any major retracements or reversals, it can be beneficial to add more projection levels to cover the finer details of smaller swing points. That's why it would be suitable to have the 1.618 level in levels between 2 and 3 on this chart. This ATVI chart is a mix of the previous Etsy and Dow charts in terms of having more regular sharp swing points that congest price, with brief periods of increased volatility. The effect of these characteristics would normally lower the precision of fib levels from various fib techniques. However, since the larger trend is quite stable with regular retracements often of less than 30%, there isn't a major impact on precision even when using a less precise method such as raising the zero level of a fib retracement. The distances between fib levels are relatively wide due to the large trend used to define the fib retracement range. However, the stable trend characteristics limit the effect of lower precision from wider distances between projection levels. A series of gaps and large price fluctuations at new record highs in early 2021 is a drastic departure from most of the earlier stages of the uptrend. Naturally, this results in decreased precision of the minus 0.236 level running more precisely through clear swing points around the 100 boundary. After all those examples, it is now time for you to practice applying these techniques to charts covering previous price action. That way you can see the effects of applying and adjusting fib extensions, projections, and expanded fib retracements. Remember, there is often more than one way to arrive at very similar results. Different fib levels can approximate the same general areas depending on the fib technique and swing points chosen. It's also beneficial to practice with price action in the present and see the performance of your applied fib analysis under current market conditions without the benefit of hindsight that is available when practicing with past price action. Perhaps most importantly, it is necessary to be reminded of fib analysis as approximating areas of opposition to a trend and not a perfect tool for pinpointing the exact levels of tops and bottoms on a chart. Regardless of the fib levels used, it is always important to watch short-term developments at fib levels and take into account broader context. Best wishes and enjoy practicing Fibonacci price analysis techniques. May your technical analysis skills progress. For more on Fibonacci methods, as well as indicators, follow Ascencore. Thanks for watching and have a nice day.